Buying a shared ownership property is a completely different process when compared to a standard property purchase. In this video, we're going to take a look at how to buy a shared ownership property in 2022. Let's go. Hi, my name's Alex Kerr. I'm a qualified mortgage broker and my passion is simplifying the mortgage process for first-time buyers. Let's get into the vid. You might be considering a shared ownership property as it could be the only option for you, or you might want to move into a bigger property and shared ownership can enable you to buy a larger size property when compared to a standard purchase. But the rules are different, the process is different, affordability is different, and the way mortgage lenders look at shared ownership is also different. So where do you start? To give you a rough idea, the first approximate calculation I always do in my mind to give me an idea if shared ownership might be an option is to take between 10% to 12.5% of the full purchase price of the shared ownership property. And if your single or joint income matches this figure or above, then there is a good chance it may fit. Housing associations vary with their calculations. I have had some fit at 10% of the purchase price and others between 12 to 13%. This is just a very rough calculation at this stage to give me an idea if this may work. This is based on the minimum deposit required of 5%, purchasing a 25% share over the standard term of between 25 to 30 years. So if you would like to buy a property which has a purchase price of £300,000 and your income was £40,000, then my first thought would be there is a good chance that this could fit. If your income was anything below 10% of £300,000, so anything under £30,000 as an annual salary, then there would be a good chance this would not fit. However, it all depends on the deposit and other variables such as credit commitments and expenditure. The more you are putting down, the more this will help the situation. When you go for a shared ownership property, the housing association will have their own financial advisor who will work out whether the property is affordable for you. Affordability is worked out differently because you will have to pay rent in the share which you do not own. This is typically 2.75% of the share you do not own. So for example, a shared ownership property with a full purchase price of £100,000, purchasing a 25% share would mean the remaining share you do not own would be worth £75,000. 2.75% of £75,000 equals £2,062.50. Divide that figure by 12 and your monthly rent would be £171.87. You may have a service charge and ground rent to pay on top of this as well. The best place to look for properties for shared ownership is on the Share to Buy website. You can also go in the usuals. I prefer Rightmove over anything else. If you want to look at purchasing a 25% share and the property was £100,000, then you would need to look at properties for £25,000 and not £100,000 in order to bring up shared ownership properties. You can play around with the filters in the different property portals. They will usually have buying schemes that you can tick. Once you have seen a shared ownership property you like, you would get in touch with the housing association and arrange an appointment. You are normally assessed in two phases. The first phase is more of a paper-based application and the second phase is more of a financial assessment where you would need to provide payslips and bank statements. Once you are given the green light, you can then secure your property and submit your mortgage application. It's a good idea to get your mortgage options checked out as the first step to avoid disappointment. On that subject, if you would like a free, no obligation chat to discuss your shared ownership mortgage options, just click the link in the corner of the screen or the logo at the end of the video. So what are the mortgage requirements? The majority of mortgage lenders will require you to place a 5% deposit. However, this is a 5% deposit of the share you are buying and not the full purchase price. This is one of the advantages. The minimum deposit is a quarter of the amount of the deposit required when compared to buying a standard property. You can buy both new builds and resale properties for shared ownership. Not all mortgage lenders will lend for shared ownership, and be very careful when checking new build criteria, because new build criteria is not the same as new build criteria for shared ownership. The deposits will vary and you need to do your research carefully in order to get a lender based on a 5% deposit, especially if the property is a new build. There are advantages and disadvantages of shared ownership, and before I get all the anti-shared ownership comments below, shared ownership is a fraud, do not do shared ownership is the biggest rip-off. Yes, I understand it's not to everyone's taste, but did you ever think that for some people that this is the only option to own their own home? Did you ever think that this scheme is great for people on lower incomes? Did you ever think that even if you own a small percentage, you are creating a mortgage history? So what is it you are saying? Carry on paying rent and own 0%? If you want to work out more accurately how much you can borrow in a shared ownership property, I would look for lenders that do shared ownership mortgages and then use their affordability calculator, remembering to indicate that it is a shared ownership transaction. So you now know how to estimate the rental payment and should be able to get a more accurate figure of your borrowing potential. However, just use this as an estimation at this point. Once you have spoken to your bank or a mortgage advisor, your affordability will become much clearer. Like I said earlier, there are pros and cons to the shared ownership scheme, and one of the first videos I ever did on this channel a couple of years ago was a pros and cons of shared ownership. It's one of the most viewed videos to date. You can have a look at it if you like. The video looks terrible though. My plan is to make a brand new pros and cons video once the new affordable home scheme has kicked off, which is a complete reform of shared ownership. This will mean you will be able to buy lower shares, purchase extra shares in smaller increments, and the maintenance cost will be more the responsibility of the housing association. So reform is coming to this area, which is great news, and we will of course do an updated video once this happens. If you're trying to buy a property and discover you have problems, maybe haven't got much of a deposit, maybe you can't buy a property at the size you require, maybe you have some minor adverse credit. If this is the case, then shared ownership may be worth a look. Today's question, are you considering shared ownership? Have you got any questions you need answering? Let me know. Mortgage warning. Please note, we do need to let you know that your home may be repossessed if you do not keep up repayments on your mortgage. So thanks for watching today's video. I hope it has provided you with some useful tips. Please check out the show notes for a recap with access to any links discussed today. Please consider subscribing and ringing the bell to receive notifications on our latest videos. I've been Alex Kerr, providing the best tools and tips to first-time buyers. I'll see you in the next one.